Hello folks, welcome to Pro Trader Strategies Market Commentary for Thursday, March the 24th. March the 25th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I would talk about the economic data, geopolitical environments, how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further and talk about option strategies I'm implementing into my portfolio based on the assumptions I come up with in that market analysis. And for you folks out there, we have streamlined the process for you guys to find the optimal option strategy for any given assumption. We don't just picking option strategies out of the hat where we've got a bullish assumption, so let's go out and buy a call. No, that's not how we work here. What we do is we look at these underlyings and find out if the pricing is expensive or cheap in the option montage. That's your first clue as to what kind of option strategy you're going to be working with. And we're going to be starting a whole new course right here and now coming up for swing trades and option strategies around those assumptions we come up with through that swing trade analysis. All right, so check that out. Without further ado, let's get on with the economic data across the pond. Not really a whole lot going on. Everybody talking about M2, M3, money supply, velocity of money. Listen, folks, velocity of money is getting sucked up by major corporations. That's why I talk about spending locally at smaller businesses is what really drives the market, because that creates velocity of money, folks, when we spend our money in different ways. If everybody is buying Starbucks, everybody is buying Amazon, everybody is using Google products or Apple products, then Apple gets all of that money, Google gets all of that money, Amazon gets all of that money, sops it up. That does not create velocity of money, folks. We are spending our money the same way when we buy the exact same products. It's only going to work for creating velocity money if we spend it in different ways. All right, so that gets rid of that argument that everybody is trying to talk about. We have to start being more... we have to be better stewards of our capital and how we are spending that rather than everybody spending it in the same place. All right, so not a whole lot going on across the pond like I talked about. Here in the United States, though, we do have a couple of Fed governors speaking, one of them being Williams. I think he spoke earlier this morning. And then Williams again today, that was Williams early this morning. We have Evans, Bostic, Daly, Williams again today, and Clarita. All right, anyway, I used to be able to say her name. Anyway, final GDP in the United States coming in at 4.3%, expected to be 4.1. Unemployment claims coming in lower than expected at 684,000, expected to be 727. So much better than expected there, but we did get a revision to last month's number up by about 11,000 more claims than what was expected. They're not really going to make up for that headline beat on there, or at least ruin that look of that headline beat there. Like I said, a couple of other Fed governors speaking, and then natural gas storage is a drawdown of 36 billion cubic feet, expected to be a drawdown of only 21 billion cubic feet. All right, markets. We've got a couple of things going on here. So let's... Crude oil cannot seem to make a move to the upside or any discernible directional move here. I'm still leaning towards the bearish side here. We've got another engulfing pattern here on crude oil yesterday. We got an engulfing pattern to the upside. It actually is just slightly inside of yesterday's range, but I would have to say that from a chart standpoint, that is going to be an engulfing pattern to the upside. That would give us a little bit of credence that say, hey, we settled above this 50-day simple moving average. Engulfing pattern, that's going to be a bull sign. What do we get today? Boom. Key reversal here, almost an engulfing pattern at this point to the downside and below the 50-day simple moving average. I still am firmly believing we're going to roll over here, folks, and move into the lower 50s here relatively soon. I think that this market is well overdone to the upside. Yes, there is demand for distillates and gasoline, but I do not think that this reopening trade is the end-all be-all here, folks. I think that we're going to see that this reopening trade is going to falter a little bit. Already across the pond, we're seeing more lockdowns, so that is going to crimp some of this demand for the crude oil products. Then we move over to bonds. Yesterday looked like we were getting a bit of a topping pattern. Could be today again, but I'm looking for this market to continue to move to the upside, test that 160 handle again, and get back in there. Yes, we are seeing some Fed governors speak today. We're going to have to really keep a close eye on that, see if they're either dovish or hawkish. We saw originally Powell was very dovish, meaning wanting to hold back on raising interest rates. Now hawkish. Governors are starting to come out of the woodwork. That means that they are keen hawks on inflation and worried about that. So if you're hawkish, it means you're leaning towards raising interest rates. So I think that they are going to be a little bit more dovish as they see these economic data points come in a little bit slower than expected. Yes, this stimulus package, as a matter of fact, it was probably a bigger tranche of money that anybody got, because I think the children or dependents got a lot more than what they got in the past. That is going to really drive this economy for the short term. But if all of these other policies are going to come in and counteract that, then we're going to see this market start to struggle here. All right, gold unchanged, up or actually down just $3 on the day, but that's despite the fact that we're seeing a massive sell-off here in Bitcoin yesterday. Not making a bottom pattern. This is a continuation. When you get these two kind of lined up together, I wouldn't have expected any less. It looks like we are going down to test the 50-day simple moving average, or at least 50,000 relatively soon here in Bitcoin. Will it be able to hold? I don't know. I don't see a whole lot of bullish arguments at these levels. All right, the VIX is moving a little bit higher, and we still have this whole rotation happening where we were seeing this out of the tech sector into the reopening. Folks, I think that this reopening trade has now gotten ahead of itself. I think that the stay-at-home trade is probably going to do a little bit better, or at least have the opportunity for some of these pullbacks to get involved in some of these names that you felt like that you were chasing maybe. Now you're getting this pullback. This is going to be an opportunity, I believe, to get involved in some of those names. And we can see the NASDAQ off 142 on the day. Dow Jones Industrial Average off 100 on the day. But Dow Jones holding up much better than what we're seeing over there in the NASDAQ. And something to keep an eye on here is this 123 Fibonacci. Are we going to settle above it or below it? You know, we right now are continuing to see higher highs, higher lows, and you know, a stop right here. A lot of times what we see is these lows kind of line up with the previous highs, as that would have acted as resistance. That acts as support now. When you see those highs, that's usually a resistance area. Maybe that doesn't necessarily line up with a Fibonacci. That's not what we're keying in on here. What we're looking at is those areas where the market started rolling over. And then when the market pulls back, it has a tendency to kind of clip on the top side of some of those markets, as you can see here with the Dow Jones Industrial Average doing just that. E-mini S&P is off by about 18, finding support on the 50-day simple moving average. Again, markets are looking a little bit weak here. We are, though, at this point, continuing to see higher highs, higher lows. We haven't broken one of these previous lows, which would break that bullish pattern. We break that down, that swing trade reverts to now we're moving and recognizing a pattern that is in correction mode, okay? So that's what we're going to be talking about. I'm going to talk about these swing trade setups in these daily market commentaries, and we are going to then look to the webinars to find those find the best strategies for those types of moves. So make sure your guys are taking advantage of these webinars as well. All right, overnight inventory very short. No attempt really to flush those guys out. The only thing we've done is flushed out the shorts from the day session so far, but we are seeing this completely move this paradigm slightly lower here at the point of control, the value area, all of that slightly lower. That's acceptance of value at lower levels. And I haven't added anything or taken anything off from my portfolio. I am looking at a couple of opportunities for bull type moves in these swing trades. We, like I said, have these pullbacks. There's some setups where we could probably take advantage of a little pop here in some of these names that have been beaten up during this mini sector rotation. I think this year is going to be a great year for swing trade, folks. Why? Because we've had a massive rally in the equities, and we generally will see a consolidation period after that those types of massive moves that we've seen. So I think that this is going to be an opportunity to really get in and get out of trades on these types of swing type trades that are going to only last a couple of weeks. This year is going to be a good opportunity for those types of setups. So make sure you check that out. Also, one last thing, make sure you take a moment to go over our disclaimer. As we're an educational company, it's going to come up here at the end, so please take a moment to read over that. I'm not trying to get you guys to jump off the cliff with me on these trades. What I'm trying to do is teach you guys how we look at the situation around our directional assumption to find the optimal option strategy for you. All right, so that's all I got for you. Please give me a moment. Give me a thumbs up. Hey, man, you aren't limited on those likes. If you've taken anything away from this daily market commentary, give me a thumbs up. I appreciate that. It really does help. Also, if you have any questions, comments, or anything you'd like to see me cover in these daily market commentaries, let me know. I want to make sure everybody's clear of concept, and we are creating content that you guys are enjoying and have something to take away from it. So please, take a moment to reach out. That's all I got. If you can't take that, take it easy.